What are we talking about today, Victor? Would you like to share the question and the rundown for our viewers? Because we have a very special topic.
Yes. So my topic is somewhat of a relevant kind of in today's issues, right? Not today's issues, but I guess recent news in light of recent developing news that it might be still developing now, but it happened about I think it's 2 weeks ago or 3 weeks ago, within 2 to 3 weeks ago, where we had a bank collapse. I know, right? So that's I mean, when you don't know the details of how they work, I didn't. I'm not going to lie. I'm not going to pretend I didn't. I did know what happened. But that's where that research takes place. When you go into it, look into what all these terms mean, what caused it, what helped kind of make a perfect storm around it. And that better gets you a better understanding as far as like how mentally kind of panicked you are, or should you not to be. Right?
No, it's crazy when you hear that. You said bank collapsing, right? And it could only mean something bad. But
exactly,
once you do your research, you're able to like dismantle what it really means.
For sure.
So I'm excited to talk about this.
And you don't get immediately panicked. You don't have to worry about like, should I go take my money out of the bank? Should I do this? I mean, we'll go into detail, right? But the basic question to you, Michael, is, so that we can get some context, it's the American economy is based on the collective contribution of its financially active citizens, meaning that we are all part of the banking system. We contribute money, the money is used, and we deposit, we withdraw. All of us are doing this collectively, right? With the recent failure of the Silicon Valley Bank, which is what the bank into question that failed is regarding SVB in mind, what can we do as a country, right, as a group of people, to mitigate or altogether avoid the deteriorating confidence of the public's involvement in banking institutions?
Whoa.
Take a breath.
Catch your breath.
I know, hold on.
So again, it was something that I was not truly aware of. And I didn't really like know where to start with this. So for me, I have to like break things down. And so I had to first think as a consumer, like, okay, I have a bank account, I have a savings account, I have a checkings account. What does that mean? Like, it's not like I'm a millionaire. So is my money like really being affected? And so I just kind of started to, as you grow up and you have to start making payments and you start thinking about your retirement, all that sort of stuff comes into question.
Oh, yeah.
And so one of the recent things that I've been doing is trying to form more of a budget with my money. So I know where every dollar is going at the end of the month. And things that I've considered are my car payment, right? And the interest rate in my car payment. And I have an auto loan with a bank.
Yeah.
So I started there. And this could also be applied. This is like a general thing that could also be applied to someone who has a home mortgage, right? A loan. So I was like, okay, just trying to understand, like, what does that all mean? Like, how does this affect like the everyday consumer?
Yeah.
And it was reminding me of the 2008 housing market crash, right? With what had happened with the banks.
The scale of it is similar, like it's completely similar.
Right. And what happened a few years after that, they were like administration, the government, they were trying to come up with ways to prevent that from ever happening again. And so they had some laws passed where they encouraged more, and they included like policies and regulations on banks. So if you were a bank over 50 billion, there was
with 50 billion in assets.
With 50 billion in assets, you had to go through like comprehensive, like almost like background checks, policies, risk management, stress tests, like making sure that the people's money or these assets that you were managing were balanced out, right?
So in other words, you had to meet specific prerequisites. If my bank had this amount of money, then I have to make sure I'm following these regulations.
Correct. So then what started happening was that people or investors, or in this, we'll call investors depositors, because they're the ones that were depositing
Yeah,
money,
yeah, for
right?
sure.
The big amounts of money.
Contributing and whatnot. Yeah.
And the way that depositors, contributors make their money is by putting it in banks, and then banks making loans out to
Yeah.
people, whether that's businesses,
Yes.
whether that's home mortgage, mortgages, that sort of thing.
And by law, they only need to keep 10% of your deposits. So you make $1,000 deposit, they only need to physically keep $100 of that. The rest, they can do whatever they want.
Right. So then there was these business people, specifically to Silicon Valley Bank, SVB,
Yeah.
like venture capitalists, right? People who were starting tech companies needed money, but like,
And that's 90% of their clients. That was more than 90% of their clients. People with above, I would say 100 million, or there would be 100 above the threshold of what the insurance was covering.
right. Because when you are starting a business and you get a business loan out, the bank does like an audit, like to see, okay, well, how much money do you have? What's your credit? How much money you're, all that stuff, right?
Oh,
and
yeah.
most people don't sometimes get that business loan, because if you don't got the money in the first place, and the bank is not going to take that risk on you.
Yeah,
but if they
exactly.
do see a business proposal and
Yeah.
all of this,
There's
and they
things
see the
moving,
return
yeah.
on their investment, they might make that.
For sure.
But it was really difficult for these tech startup companies
Yeah.
to get these loans. So the person who owned the Silicon Valley Bank, Greg Becker, I think it's Becker, if I'm pronouncing it right, they started lobbying more to government, saying, hey, can you bring down the regulations and
Like
the
the
policies?
requisites and whatnot?
Yes,
Okay.
for the $50 billion in assets stuff, because it that only applies to big banks
Yeah.
that are doing housing market
We're
stuff.
not-
They're doing
yeah.
auto loans. We're not that. Like,
We're not that level. We're dealing with a different customer, client. Yeah.
a completely different industry.
Yeah.
Like, that's not
They're
going to
talking
happen.
about Silicon Valley Bank in California, around the tech industry,
Yes.
around those startups, Google, all those things.
Yeah,
that-
they're like, oh no, we're not the
Roku,
housing
do you know
market.
Roku?
Yeah, Roku. They're like,
Roku
it's
was
not gonna.
involved.
They're not gonna affect any of
Yeah,
that, right?
exactly.
So then, in 2018, I don't know if you can guess who was in
yeah,
administration.
Trump recalled that. I remember
Right,
that. Yes.
they started doing rollbacks on the policies
And-
and the regulations on that.
I don't know specifically what the threshold was. I think it was 250 billion or something around that. Do you know specifically? Because I know they had that, and all of them were subject to stress tests. And then Trump, yes, was part of that.
It was
administration,
250 billion,
right?
Yep,
And so
250 billion.
he recalled that and said, "No, this is not a requisite no more. We don't need to worry about these banks under or above this amount or under this amount or at this amount, right?"
Yeah, 250. They did it. I think it went down to 50 billion.
Yeah.
They're like, it's a 50 billion is good or whatever, something
Yeah,
like that.
yeah.
But yes, you're right, exactly. We're on the same page, right? So this is happening in 2018. They end up helping these regulations come down.
Yeah, because arguably speaking, there's pros. You know, you're giving opportunity, but at the same time, we're also increasing risk.
Yes. Right. But like, who is managing and overseeing that
Yes.
risk, right? It originally was the government and
For
doing
sure.
all of that.
Managing, making sure.
But when the banks are like, it's okay, we don't need you to oversee us.
Yeah.
Like, we're good. We're like this. So they're like, okay, well, I know that they saw the pro and like, oh, if we do bring down those regulations, people can invest more of their money in the banks, and then
more
they
money
can
can
make
flow.
more loans,
Yeah.
and then they can help these startups.
More
and
stimulation in the
innovation,
economy. Yeah,
and
innovation,
technology
for
will
sure.
help, right?
Yeah.
It was going in that direction.
Yeah.
So that happened, right? And I was at one point, right, in 2016, it was at $45 billion mark. And then by 2020, it was 200 billion, right? The bank, like where they were at, they were only managing
Like in how
about,
much,
SVB was like managing 45 billion,
And
right?
now they jumped up because
They jumped up at
yeah.
200 because
in 2
because-
years.
in 2 years, because all these investors
Yeah.
were like the people, the depositors that
Yeah.
were investing their money in this bank
Yeah.
were, they're like, we can get our money back. And now that the regulations have gone down,
Yeah.
there's going to be low interest rates,
Yeah.
right? So all these startup companies, they're going to want to get loans out.
Yeah.
And since the interest rate is low, it only makes sense for them.
Yeah. It's an easier kind of financial decision.
Right. So as all of this is going on, these wealthy people
Mm-hmm.
are doing really well because they invested their bank. This specific bank is only in like the tech industry. But then what starts happening? COVID. Now, I don't know if it was result of COVID, but inflation starts going up,
Yeah,
right? This is what I think is the cause.
Yeah, I think COVID might have been a contributor.
A contributor,
for sure.
right? I mean, it happens if you don't have moderation in the market, then something's about to crash,
Exactly.
right?
There's
and
more-
so COVID, what was going on? People were at home, and there was just more innovation, more tech, more all of that happening. And then the housing market was good, like loans were at a very like low price,
Because
like interest rate.
They were trying to stimulate the economy again, to make
right.
sure to get it back up.
Within those 2 years, right?
Yeah.
And then right after 2022, at the end of 22, the interest rates in the banks skyrocket, right? The government was like, no, we have to increase the interest rate because then that's going to slow down.
I think there you might have it a little bit wrong.
Go ahead.
Only because the interest rate I think you're referring to is the bonds they specifically got from the government. So SVB went and purchased bonds so that they can use their customers' cash and have it somewhere where it's accumulating interest. They purchased it during COVID. They got those COVID bonds at a very, very, not at an aggressive interest, but lower than the usual amount. Right after COVID went down or came back or whatever, or like went away, the government increased the interest rate, but not as the bad to the people buying it. It's basically saying that if you buy the bonds, you're going to get more interest rate on what your original investment is. So you're going to get more money back. But SVB needed money at that time because you need the only way these people who are the people who were their clients could get money were people who raised money to get donations, to get investments and stuff like that. And there wasn't that much of market in during the COVID time, right? So that happened, whatever. They're trying to sell their bonds now because they're in a bind. They need money, but they sell them at the loss because now they're competing with interest rates that are much better than what they got their bonds at. So I think it was like a $2 billion loss.
Yeah.
And so that by itself drove their stock market down, which started scaring their customers, their clients. They also, I think they went on Twitter and started letting their clients know and everyone trying to say not to panic to people, right? That we're raising money. We're looking for people to invest, to make sure we're still in operation or still in business, or just to kind of help, like, with the bookkeeping, right? Which obviously is going to contribute to people panicking.
Right.
So people started panicking. Word spread because everyone's in the same social media group, right? Everyone's in that same neighborhood or whatnot.
Yeah.
And that's when ultimately what led to what the collapse was, which, I mean, you can go back into the basic meaning of what the worst thing that happens to a bank can be. And that's everyone at the same time wants to go get their money.
Right. Exactly. Yeah.
So you can take it from there.
Okay. So, and really quick, just to clarify,
Yeah.
when I was talking about the interest rate, I was talking about in general, like as a whole, like if people noticed that the interest rates for home mortgages and auto loans were going up, right? And what I think, because yes, what you said is correct, right? That all did happen. I always think, how does that affect me, right? Like how do these things in the banking industry? Because I'm like, okay, California tech, like that doesn't involve me at all, right? So let's, other than like the semantics, because there's a lot in that.
There's a lot.
Basically what is kind of frustrating to me as like an everyday citizen and consumer with that happening is that when you have a relationship with the bank and you have an account, like a checkings or a savings account, you want to make sure that your money is safe, right?
Yeah, for sure.
And
that's the point of using the bank.
Right. Let's say I have a bank with my local regional bank, right? And we know we're a border town. And so there's a lot of international banking, lots of international contributors, lots of people from the US. And we are, in terms of our banking, like we should be aware of our money because I have a lot of friends in the banking industry and they have a lot of clients that make investments, right?
Yeah.
But remember, just because you go into your app on your phone and you see your money there, yeah, that's how much money you have in the bank. Yeah. But like, if they hear about this collapse, this doom, and you're like, oh my God, I got to go get my cash out.
For sure.
If everybody does it at the same time, that's why a bank can collapse, because they don't have all of the cash in hand,
Yeah.
because they've lent it out for different loans
Yeah,
and
yeah.
stuff
They have
like
to
that.
use that money for stimulating and, putting it back into the economy and whatnot. And so that's the ultimate problem with any bank, whether it's a small bank or a big bank. If the majority of their customers go in at one time and expect to get their money back, they get that bank to collapse financially. So
Right.
the whole premise of why they started kind of going into overdrive, because I don't know if you know, but they got everyone who was in that, all the clients, all the people's, the bank's customers, they got their money back.
Right.
know that?
They're guaranteeing, that they're going to get their money
Yeah,
back. They haven't gotten
exactly.
it back yet, but they're going to guarantee that they're going to get it back.
Do you know the FDIC's threshold?
250,000.
Right. That's
Right.
for like the government will cover that,
Yes.
guaranteed. Everything above,
Yes.
right?
So where I was,
Mm-hmm.
yes. So before we go there, because that's exactly where I was going, is when you go to the bank, you have your money there, you see it, you're guaranteed to get your money back.
Mm-hmm.
So whatever that money is, it doesn't matter what bank you have, that sort of thing. It's covered by the FDIC.
If it's not above 250,000.
Yeah,
If
the
you're not
federal
that rich.
deposit insurance. Yeah, that's why for me as a regular consumer, I'm like, okay, that's
Yeah.
why people have their money in different banks. Some people use a
Oh,
strategic
yeah.
plan to kind of not hit that 250,000 threshold,
If you have
because
500,000, half and half, one bank, and
right,
it's all
you're
your money
okay,
safe.
because
Yeah.
if a bank collapses, the FDIC will recover that money back for you.
For
So
sure.
you're good, right?
Yeah.
What was also happening with SVB was saying, oh no, like they were encouraging all these people to keep their money in that bank, even if it was over that 250,000.
Yeah.
And this is where the frustrating part is. It's like, yeah, they're guaranteeing that money back to them. But it's like these people who invested their money, when you would take a chance on a business and you invest,
There has to be consequences if it doesn't go
yeah,
right.
because there's a chance that it might not go right and you might not be getting your money back. And that's just the risk of an entrepreneur, of an
Yeah.
investor. It's like, you know what you're getting yourself into
Which
when you're
bring-
doing that.
It is a moral question, right? Was the government right in saying we will give you your money back because it is over $250,000. We don't have to give it back to you, but we will. Is that correct? One, right? The other part to that is that all these companies aren't just individuals. These aren't an individual person just storing their money there. All of these are companies who have employees and who are expecting paychecks and who didn't have paychecks for the past week or two or whatever. And if all of those business go down or aren't able to financially upkeep their employees, you're talking about 50, 100, 200, 250 individuals who can't financially supply their family's needs, their own needs, or their rent, their food, just because, the bank decided to mess with the money.
Right. It's all of these investors. And this is where for me, it's complicated in a way, in a sense, but I believe in consequence. I believe in having to take accountability and responsibility for your actions, that sort of thing.
Yeah.
So everybody knows when you walk into the bank, right? You see that sticker, that FDIC thing, right? And so
Yeah.
I know that at my relationship with my bank, if something happens and I have less than the 250, that my money is guaranteed
Yeah,
by that,
I'm
right?
safe, yeah.
That's what the purpose is for. Like the FDIC, like that's what that insurance policy is for, is for people with under 250. That
For the
like,
mass majority
for
of
the
the
mass
public.
majority,
Yeah.
because it's just my savings account because of like my income that's coming in. So I use a banking system.
Yeah.
It's not like I'm an investor
Yeah.
and because if I was an investor and I invested 500,000, then I could, triple or double whatever that is,
Yeah.
right? But that's the risk that I'm doing because I'm an investor. But if I'm an everyday person and I have less than 250, that's my insurance, because it's not like I'm investing things with my money. I'm just
But-
keeping it safe somewhere.
What if you are a business owner? You got 150 employees. You're managing your money at that bank. They collapsed because they mismanaged their money, right?
Mm-hmm.
Not you. You didn't mismanage it. You just
Yeah.
left your money in a bank. That's it. You're not the one making those risks. The bank's making those risks, decisions, right? Investments, seeing what bonds they want to buy, whether or not they need to sell it at a lower cost or a higher cost. We don't know the whole story about the mismanaging of their financial crisis, right?
Right.
But one thing I can guarantee is that it wasn't their depositor's fault.
right.
So do you think
To a sense, it was the depositors' fault because they knew the risk that the depositors who were like putting the money there for investment. And then I know you talked about a business owner, but if you got a loan out to help
No,
offset
that's
the cost
irrelevant. That's irrelevant.
for your business,
Yeah.
then that's again on you.
Yeah,
Again,
but we're not talking about loans. We're talking about you having your money where you payroll comes out. Like, what if you have 150, or let's say you have $350,000 worth of your payroll, and every week it's every month it's $150,000 worth of payroll, or $200,000 worth of payroll. You can't pay your employees now because that money.
Right. It's hard. It's difficult. But the thing is, like, that's why those bills and laws and audits and all those policies were put into place to avoid this from happening. But the bank,
going back to what
Yeah.
Trump removed.
exactly. If that would have just stayed in place, those risks would have been assessed and it would have not happened. So it goes back to someone taking accountability. Like, yes, that could happen, but again, it was in this specific sector, and I feel like, oh, we're tech and we're this and we're that, nothing can really happen to us in that sense. And their ego got inflated, and then this happened, and it did affect these small businesses, which is what I understand. But these small businesses also saw like opportunity there. They're like, oh, this is a specific bank, because they could have gone to another bank and just followed the rules and been good, but they wanted to do banking with this bank because of all the pros that this was coming. And when I say pros, I mean the lack of regulatory policies. But going back to your question about, do I think it's right that the government is bailing out these companies?
That was one of the questions to kind of help see what it is.
Okay.
Now that we're going into the long stretch.
Well, let me answer your question though,
Okay.
because the reason I want to answer it is because I think that the government has no choice right now to do that, because
To like give them back the money?
yeah, they're being cornered because you said all these people started coming out, right?
Yeah.
These big contributors want to get their money back. Never in the history has the government said, we're going to guarantee more than 250,000. Like, the FDIC has never guaranteed more than 250,000. Usually that's what it is. A bank collapses, it closes, and it's done. And you file for bankruptcy and you're done, right?
Yeah.
But then you brought up a point where all these other businesses, these people, these employees are going to be affected. In order to avoid what happened in 2018 for like the market to collapse, this is where it affects everybody, is that these huge contributors and depositors were saying, like, if you don't save us, bail us out from this, it's going to affect all these other small businesses, and then it's going to affect everybody as a whole. So the government is they're technically cornered right now to be able to bail them out so that they can keep that from happening. Yeah. So it's kind of like a psychological thing. Like, do you teach these people a lesson, or do you save like the masses?
The masses, yeah.
But then that also creates precedents. So we'll get into that'll be kind of like in the middle, or of like my closing with what because of this bailout, it's going to excuse, I think, some behavior. So
okay,
continue.
The question is, again, because arguably speaking, it's done, right? What can we do to avoid this? What happened? What's happening? It happened, right? We're there.
Yeah.
What can we do in the future to avoid this? Mitigate the risk, so that we can keep the public's confidence in involving, like, so that we don't have people who are scared to bank. What can we do in the future?
I mean,
what would you suggest?
I would suggest what was working before they made the addendums to those laws, and the lack of oversight and people and the requirements and the policies that were there beforehand. Like, if they would have continued to just let an outside perspective continue to monitor and do risk assessment and stress and all of those management things, it could have been avoided. Again, this should not have happened, but they started advocating to reduce the policies and regulations. And so because you let people have almost like too much free will and you didn't monitor it, it by the time they realized that it was going to be a huge risk, it crashed.
Or, I mean, do you know that they also gave themselves the regular bonuses that bank people got hours before the feds came in and took over?
I didn't know that.
They give themselves, like the banking people there at the SVB, they give themselves the usual bonuses that they get.
Well, I mean, I didn't come across that information, but if it did, it could make sense because, right, out of the 200 billion in assets that they had these bonds that you were talking about. I don't. The amount was what, 21 billion, I think, but they lost 2 billion in assets.
Yeah.
So those 2 billions were like they were trying to get that money in cash so that anyone who was going to the bank and getting their money out, they could pay themselves out. So if they did pay themselves in bonuses, they could have done that from the $21 billion that they were able to get.
Yeah, I mean, regardless, like the how it happened, what do you think about that?
What do I think about the banking giving themselves bonuses?
Amidst a financial
crisis?
Well,
that just means like people are selfish and they don't care about other people. But it's just so hard because I know that people make mistakes. Like we're in human nature to make mistakes, but you also they put themselves in those situations. Those people who banked with them, those people who listened to them, that's the problem with like painting this pretty picture and not having like a set of rules and structure, is that something like that can happen. And unfortunately, there's going to be casualties.
Yeah. Do you think they did that on purpose? Do you think they did that with the intention, knowing that they would more than likely be bailed out by the U.S. government? Or do you think they made a
You would
mistake?
have to be a super smart, strategic person to be able to have done that, because the only reason the government again is doing the bailing out is because all those contributors and depositors started publicly doing that.
For sure.
And they knew that if they kept doing that, they were going to create like doom and
you would have to
scare in society.
So do you think they did that?
I don't know. I have never thought of that. No, it didn't cross my mind. It depends. Is the reward better than the risk? Like that was a risk that they took.
Yeah.
Was the reward gonna, do you reap what you sow? I don't know. It depends how much their bonus was, but
even if it wasn't bonus, I mean, we don't know the whole. There's gonna be.
Well, as I'm saying, I don't think if that's the only way I would do it. If you're telling me if it could happen, it's only if you knew like that it was gonna plan out and you were gonna be able to get your money back or whatever. But if you didn't know that, I don't know. I don't think they knew. Maybe, like I said, you have to be really smart and strategic to be able to pull something off like that.
They're making billions of dollars. They're managing billions of dollars to get to a point like that. It's not an everyday Joe.
But they would have had to plan this like from the very beginning to like influence these lobbyists to influence these politicians and people in office to bring down the regulations so that they could bring in that huge amount of money and not be like overseen by the government. Like it takes a lot of planning. I'd be surprised if there was a plan and that was intended.
I don't think it would. The only reason I say is because most of this is we'll just throw money at them. You know what I mean? In the government, I'm just gonna throw money at them and hopefully they vote something in my convenience. It's just money. This isn't like crazy planning. I mean, if I said, okay, you know what? We can, it's simple just to make a profit. And then okay, so like in 2008, right? Whatever, when the financial crisis happened, right? All that happened, right? And then most of the stories that followed that, blaming the crisis, was mostly blaming it on external factors like immigration and foreign policy and all this BS, right? Don't you think it's very simple to make $1 billion, $2 billion, $3 billion, $5 billion, however many billions dollars of profit and spending 10% of that on a campaign that redirects that blame?
I mean, again, that was a lot. I didn't get all of it, but
no,
I chose certain things from it. I'm just gonna
let me. If you didn't get a lot of it, then you didn't understand the whole thing, Michael. So
it's because you kept talking and now you're gonna keep talking. So, go ahead. Like I get because I have a thought in my head. Okay, go.
Yeah.
Because go.
So you can make $100,000 right now, right? But you're gonna look bad, or you can make that $100,000 and then spend $10,000 to $20,000 running Facebook ads, making little videos of how much good of a person you are.
Mm-hmm.
Do you understand?
It's because who are you talking about right now? Are you talking about the bank or are you talking about whoever
the people who are making these financial decisions are? whether it's the banks
Well, okay,
associations.
and say your question again.
So I'm doing all this BS, trying to get all this money out, trying to like make sure I'm trying to play the system, right? I'm about to try to do like what they did in the housing market, right? Specifically, they were lending out loans because they were interested in that interest. They didn't care who was viable for those loans. They didn't care if they even could pay back those loans. They were just interested.
Right. Question.
Yeah.
No, what's your question?
Oh no, I'm getting there. So the whole point of that was they were knowing their profits, but they also knew that more than likely the government would have to bail them out because they're not going to leave the entirety of the masses into distress because that would cause ultimately, societal.
Yes.
Like,
got it.
I'm talking about
Getting it. Yeah.
Whatever happened in 2010. What was that? The what's that thing where it was like people weren't getting jobs and stuff like that in like 2000 and like 1915 or something. The Great Depression.
The Great Depression.
The Great Depression. They're trying to avoid that, right? So
Right.
if you know that, right? And then you get your profits, you get your money, you get all this money to kind of help you mitigate those banks. And then you can spend millions or a fraction of that to lobby the government to try to get this other kind of story out that it wasn't your fault. It was actually other people's fault. But heavily, news after news, day after day, year after year. It's not that hard. Right. So do you think they would do that?
I don't know. I don't know because I'm trying to figure out what you mean if they would do, like you're saying, like I don't know where it's because I don't know what you mean exactly, but I get because there's a lot of things for me, but I don't know what to answer, so I'm just gonna stay I don't know.
Okay, that's fair. That's fair.
Okay, because I'm not too like familiar with all of that, so I don't know what the benefits would have been.
But it's not
right?
surprising if it would, right? Would it be surprising that if someone making $1 million spends 10% of that to kind of get their name in a better place?
I'm gonna have to ask this question with like a question because I would. For me, for simplicity, I'm understanding your question to be, am I surprised that this happened?
Yes.
I'm just going to simplify it that way. And I'm going to say no.
Okay.
I'm not surprised this happened because history tends to repeat itself.
Yeah, it's true.
That's why. So when you were saying all of those things about like maybe them expecting like bail, like for them to get bailed out, I was like, okay, to me, yes, I could see them being okay about it because the consequences are like if I make a choice that's going to affect one person, they'd be like, oh, it's whatever. But if there's multiple people in this table and my decision affected you, but it had nothing to do with them, but there's people behind them and they're depending on them that it could affect, then now I have to step in and take care of everybody as a whole.
Exactly.
So there is people that are greedy in that sense. And again, that's what happens, but that's why these policies and regulations were put in place, not to restrict you from doing certain things, just to monitor you. And again, history repeats itself because of the way that like a capitalistic country works. And it's beyond that, but it has a lot to do with money.
Yeah,
and
everything.
When money starts coming in and
everyone becomes numbers.
Right. And so again, I'm not surprised that this happened. Lots of people kind of assumed it was going to happen.
I'm going to tell you something that's crazy. In 2008, right, during the financial crisis, right, when they were thinking about the solution to the problem where the banks, collapsed, a lot of banks. There was a lot of banks that collapsed during the financial crisis, right? I think it was over 50 or 100. They were trying to say, okay, how do we fix this? Ultimately, the decision was they gave a lot of money to these banks so that they get themselves back into where they needed to be. So they basically gave the money that they were missing, right? Essentially, to the banks, to the corporations or the corporate individuals, the people who were managing the CFOCs, all of those. They gave it to them, and then they themselves got themselves back up and gave themselves bonuses also after that. I don't know if you knew that, but
I didn't know that.
After, you know what I mean? With the same money that they got from the government, they give themselves the usual bonuses, right?
Mm-hmm.
The interesting thing is they got a question. They said, it would have been cheaper to get everyone who was behind on their rent payment back into current. It would have been a lot cheaper. Why wasn't that an option?
Sounds like a stimulus check. that happened in
Exactly.
COVID.
And they said because of the moral implications of it.
Which is what they did right during COVID, right?
They didn't want to. Well, I don't know if that's relevant because COVID wasn't no one's. Well, I mean,
No, but I'm saying the way that they did the stimulus check to help like people get back.
okay. Well, that right. They could have given everyone the check or a deposit, or they just could have said, "Hey, you check your rent, check your account, daddy. Like I got you." Right. Basically,
Yeah.
your account now is no longer you owe $1,000, $3,000, $4,000. You owe nothing.
Mm-hmm.
You can be current. It would have been a lot cheaper. But their problem was they didn't want to reward bad behavior.
Right. I think that's the conflict right now because it's going to be applied to different things. And I'm thinking as for student loans where they're doing the debt cancellation.
Don't get out of don't let your mind straight because you missed something here. I want you
ahead.
to listen to this. They didn't want to reward bad behavior.
Right. Student loans, they don't want to like encourage people to go to college.
No, but we're
and
not
get
talking
loans.
about student loans.
But it's money.
I know,
it's money. But if
listen.
they cancel student debt, people are going to keep going
But are we
and getting
talking about
loans.
Student loan.
We're talking about money
No, we're
and
talking
people
about the
making
financial
decisions
crisis.
that is a financial crisis.
Not about student loan. We're talking about SVB collapse and 2008 financial crisis, not student loans, Michael.
That is a huge crisis in the United States.
It is, but that's a whole ass topic.
Okay, go.
But
Continue.
what I'm saying is, do you see what do you call the word when they're kind of like the hypocrisy of it? Do you see the hypocrisy of it? That their excuse not to give people that were behind on their payments the money to make them current, they gave it to the bankers and the people because they didn't want to reward bad behavior.
Okay, in a psychological sense, what you're saying to me that I understand that. But
Okay, but the banks are.
can I answer?
Yes. Well, I'm trying to get to a point where what you're missing. You're missing the whole. They're saying they don't want to reward bad behavior, but they're rewarding the bankers who made the bad behavior.
Got it. Let me give you this is another piece of information that I read about. I understand like what could happen, right, with the behavior part. Mm-hmm. The reason I really don't care, it's because I think the first example you talked about you said 2010, I think that money, like the way that where was that money going to come from essentially? I think you have to ask yourself like, where is this money coming from?
2010, what do you mean?
You said something about like during 2010.
No, the 2008, the financial crisis.
Okay.
Yeah.
During that time, you said that they were going to... Anyways, you're saying that they didn't want to reward people and give them money to like stay up with their bills, right?
Yeah.
But versus with the bankers. I don't know if you know this answer or not, but like, I'm not like, and I'm saying, right now, this money, like the bailout that they're going to do, it's not going to come from citizens, from people's banking.
Yeah, it's
right?
from a collective, a bank that they deposit to avoid these things.
Exactly.
Like banks,
it's like in the banking industry.
But the banks get their money from people. So like, I don't know.
Right. But like that 2010 example that you're talking about, was it going to come from like
the people?
The people.
We know now that it was specific.
Okay. So now that's the difference, I think. Like, is that... I think the reason that didn't happen was because the money would be coming from people back then, and now it's only coming from collectively from banks. Like
that's why it doesn't surprise you, or that's why you're not like it's not.
No,
a big
I'm answering
deal?
your question right now, like what you just said. Like,
what did I say? No, because I forgot
about the bad behavior thing. Like, what if I'm not like you said something about the bad behavior? I said I think it's a little bit different for me.
You would rather have your money. Taxpayer money, pay bankers who were giving out loans just because they wanted commission, than your taxpayer money going back to the general public who are late on their rent payments?
I wouldn't want my money going either way. I want my money to stay.
I know, but they had to fix it. Otherwise, like I'm talking about, again, collapse everywhere. People, like collateral damage. So someone has to get the money to get themselves back in current.
Right.
The problem is that they gave the people who made those bad decisions, to give those loans to anyone who weren't qualified for them. And then they give themselves bonuses and they kept going they're rewarding their bad behavior as opposed to giving it to the public, which again would have been substantially cheaper. So not only are you giving that public money to the public, you're also saving a lot of money by not giving it to the bank. And that's the problem, is that they said the moral implications, we don't want to reward bad behavior. And the argument that people have in general, even me, I would say, is that you're rewarding bad behavior. So what's the excuse? And I know what the excuse is. I was just trying to get into, like, the thing is that these bankers are the people who lobby the same people who are in charge of us. They are the same people who are made that decision on where the money goes, are the same people who receive the money from those bankers, that more than likely receive that money after they made that decision to give it to those bankers. That's what I was trying to get you to see. That frustration, where I still don't see you getting frustrated, because that's messed up. That's a whole ass hack to basically give them money so that you can get also paid, because that's how political individuals make their money under the bed. It's not like, I just, I'm getting $100,000 here and there. It's in this exact way.
Yes, obviously I can feel your frustration. Like, I just want to let you know that I don't work for SVB, so I don't need you taking it out on me.
Listen, I can't say a bad word. I haven't said a bad word.
That's good. You're very passionate about this topic, which I'm being patient and understanding.
Yes.
But again, it's way out of my scope, but it's a lot of information.
But what I told you, that doesn't get you upset?
What? No, it doesn't affect me directly.
No, I mean, it doesn't get you upset that they're trying to...
It doesn't affect me directly, so it doesn't get me upset.
It did affect you, first of all, because...
It doesn't affect me directly.
Your mom or your... You know what? My mom said...
How can you tell... You can't tell me how to feel about something if it didn't affect me.
You're right.
So if it doesn't, like...
But my mom said she got a check during that time.
What time?
During the financial crisis, that they gave everyone money.
Well, okay. Well, so you're frustrated that your mom got a check?
No. I'm just giving you, like I think they did send payouts, although I'm not sure. But I know that they said that specific thing, that they didn't want to give it to the people because you're not going to reward people who are late. I mean, it
was different times, and I think it was very traditional. I mean, just always I think we're evolving. We're always evolving. I think like money and morals and values and standards are always evolving. So I don't know. All of that to say, it was an interesting topic.
Yes. You want to close it off, and we're not going to. I'm playing no.
No, I'm trying to kind of bring it back I'm trying to figure out, where do we go from here?
You said that you think they need to reinstate the laws they took off in 2018, right? That you said.
I think they need to go back to...
That was your answer to
regulations and policies to avoid this from happening. Because this happened in an industry, this happened to one bank, right? But this happens all the time. It's not like this doesn't... Like, banks don't go bankrupt. Like, this happens more often than not.
It was a bank run, and the amount of money that they lost.
Right, because it was the amount of money that they lost. But
and it doesn't happen all the time.
Banks close all the time.
No, not as often as you would think. There was like a 4-year period. I think it was like 5 or 7 years ago that there was no banks, like any collapse in any banks.
Small banks are in small towns. No. When people leave towns and there's no money, they close down.
No, they do. You're right. But that didn't happen for 4 years.
You're saying that a bank has not closed down in the last 4 years?
No, I said there was a period in the last 7 or 8 years that during 4 years there was no bank closures.
Well, I read that banks and this kind of thing happens all the time. But the reason this was on the news was because it affected people who had invested a lot of their money.
I think it was on the news because of how large it was. It was a lot of money.
Well, it could also be because if I was a billionaire and I had invested money in there, and now you're telling me that I'm not going to be able to get my money back, I'm going to create some type of... pay people to discuss this and put it on the news that we can get our money back. It was there's a collective group of people, investors and contributors that started to speak up about this so that they could get the government involved to bail them out, to get their money back.
But most of their clients weren't individuals. 90% and above of the clients were actually corporations, like actual startups, actual companies, tech companies with people.
But there was also people who were investors and invested money and they wanted to get their money back.
But not a substantial amount.
But those powerful people with money were the reason why this was on the news.
I don't think I disagree.
Well, it's okay to disagree, but I'm just telling you what I did and what I researched, and that's what I think about.
Do you know how much money this was, bank run, versus the typical like every
I don't,
year.
but I have a feeling you're going to tell me.
It's a lot. It's comparable.
What
to
do you
the
mean bank
2008
raw? Did you say run or rob?
bank run?
Okay, so what do you mean by that?
Bank run means like when the most of the people, like a vast majority, withdraw their money. That's what a bank run is.
Right. If you're the amount that people took out from the bank to have caused this, if I'm getting this right, like if that's what you mean, was around like 40 to 45 billion that people took out, and that's why
Been more.
it caused the collapse.
It might have been like I think it was like in the hundreds of billions.
Well, I read 40 to 45.
Or
If
it might
that's
have
what
been
you mean.
45. I don't know. I'm not sure, but I know it's not the usual amount, like at all. Like this is a large enough to make ripples in society. That's why they paid them.
Right. Well, isn't that what the cause of a bank collapsing is? Is when a lot of people take their money out at the same time.
Yeah, for sure. A bank run, for
Right.
sure. But what I'm saying, the reason it's on the news and why you don't see, you said it happens all the time. Your argument for
But it's small. I'm not saying that this happens. I'm saying that small banks close all the time
Yeah.
if they don't manage their money right. If they don't.
Yeah.
It's a check and balances thing.
Yeah,
That's
yeah.
what I'm saying. That it happens like more often than not. It's just not talked about often because it's not affecting certain people. Like
And
if it's
I
affecting a
disagree
small
with that.
town. Okay, go ahead and disagree, but I'm telling you, it's like the facts. If you are in a small town and a bank closes, it's not going to make it on national television because it doesn't
Why?
affect the masses. It only affects them. So that's what
Why?
I'm saying. Why? Because it was a small bank.
It's a small bank, meaning it's a small amount of money, which means it's not going to affect a lot of people.
Right.
This had a lot of money with a lot of people involved.
Obviously, so it's going to be on the news. That's what I'm saying.
Yes.
But the other thing is, the other big reason why this was on the news and small banks are not is because these small banks are covered by FDIC and they're guaranteed there's 250,000.
Yeah, for
So
sure.
if people have less than that, they know that they're eventually
yeah.
going to get their money back. Versus this bank, these huge companies who had more than to 250 weren't going to. They could have $1 billion or 500,000. That's why it became a bigger deal was
Yeah.
because they wanted to get their money back. So they put pressure on the government
Yeah.
to bail them out.
I think it became a big deal because of the amount of money, not because of who was involved. It could have been.
I think
it could have been Chase Bank.
I don't think those two things are mutually exclusive. I think they both coincide. I think it affects.
Well, if Chase Bank went down, well, most people bank with Chase Bank as far as like individuals, which is a very big bank. It's very difficult for banks
yeah,
that large
because it's
to get.
huge.
But if they went down, they would be on the news not because someone famous complained that they bank with Chase, but because of the amount of money. Just like I'm saying, SBB.
Again, I don't think it has one. It's not just one or the other. I think it's both. I think it's that small percentage of those huge investors did not want to get fucked. I'll say it because this is appropriate. And so they leveraged their power, their money to put this on the news, but it also affected everyday businesses or small companies and people. So it was both those things. So I feel like, again, these higher people who had more money in there, they kind of knew their risk. They're like, it was kind of that example that you talked about, like going back, just how they knew that they used that small businesses because we're joint together. Even if I have more assets and you have small, we're both going to get built out because we're in this together. And in order for both of us to get saved, the government needs to help both of us out.
Yeah, I okay. To that extent, yes, I agree. That's fine. Well, we can leave it at that.
You can disagree, but I'm just saying.
No. You make sense. You make sense. Like I see. I'm not gonna counter argue it because you're gonna keep going.
I want to make sure that we. That's just what I think. I might be completely wrong, but right now that's what I think.
Yeah.
From what I was able to gather, that's how I interpret it.
Yeah. Okay. So you answered that question. Can I answer it now?
What was the question?
The whole what do we do
Yeah.
To make sure the public's involvement. So again, I feel like we need to get the people who were in charge consequences. Yeah, bail out everyone else. Make sure everyone gets their.
Did you stop the timer?
Yeah, a long time ago because we went over, and I was trying to wait to answer the question too.
Victor set a timer
I
for our
did.
discussion and he stopped it, and I saw that the time stopped. I'm like, no, if we would have been done with this conversation a long time ago, you think I want to fucking be talking about this?
I want to answer too.
Go ahead. You
haven't-
should have answered it in your allotted time, sir.
I was trying to, but you talked a lot. You talk a lot, which is good. I like it. But now you got to let me
Go ahead.
I just think that we need to hold the people who did that accountable.
Yes.
Bail out the companies, let them give their payroll to their clients. How do we avoid this in the future? Don't let the people who are in charge back in charge. Take them out of the system, right?
Yeah.
Make the company, maybe the bank, public now, so it's publicly traded. It's not a privatized company. And then now it'll be better managed. But we don't do that because, again, they're getting their own money back to the government.
Yes, I agree. I like that approach.
Nice. Okay, I mean, that was good. That was good. That was very good.
It was good. It was heated.
It was heated. But that's what it is. That's just good. That's different perspectives. That's what it is. Okay, I liked it. Do you want to send it off?
It was your topic, your question. I opened it up, so I'm gonna let you close it off.
Okay, guys. So that was a very good topic. A lot of these things, this is loose knowledge, and a lot of it is more out of like what my opinions are, Michael's opinions are. Obviously, we are just thinking outside the box, giving facts as much as can. But if there's things that you need to kind of like correct us on, feel free to comment.
Yeah, I know it was. I just want to add there. We have a lot of opinions.
Yes.
We have our own like research and stuff, but I do like that we were going back and forth and keeping each other accountable, that sort of thing.
That's it.
I will say it's an opinion that I was able to kind of form based on my stuff. So if you guys have any like insight or any other information, like put it in there.
Yeah, we can go do a part 2, right? Maybe if they get
We're not
if we
doing
were
a part
really
2.
wrong. If we were really wrong, we have
if
to
we were
come
really
back.
off.
Yeah,
They're like, dude, the name of the bank was not.
Yeah, it's not even that, bro. What are you talking about? No, but make sure you guys follow us on Facebook, Instagram, TikTok, all of their usual social media outlets, and we'll see you guys on the next round.
Victor, why did you stop the timer, Victor? How long did that go for? I think I want to leave that in. No.